Hey, Alpha fam, welcome back to another episode of Alpha Commission. It's been a beautiful couple of days out here in California, so I've just been enjoying the weather, trying to de-stress a little bit. Obviously, things in the world have been super tense. I'm a very political and interested person in these type of current affairs, so it hits me a little bit hard. You can kind of take the world on your shoulders, the burden of it, and you think that you have responsibility for all these topics, and it can get us into these type of mindsets where we start stressing out about everything in the news, or some people start fighting each other, they start dividing amongst each other. If you find yourself in that situation, just take a breather, go to the beach, go to a park, go take a walk, enjoy the outside, meet some people in your life, and don't just stare at charts, don't just focus on the news, but remember that there's a lot of good things in life, and don't miss it just because some bad men in the world are acting in bad ways. Okay, and treat your neighbor kindly, and try to bridge gaps of understanding if you're at disagreements. But if we do look at the chart today, one thing that I was just noticing is how impressively Bitcoin is, tightening into this little knot here. Obviously something is going on. Something has to pop at some point. It just can't, you know, bundle up into this point for too long. We see whenever that happens, we either have a flush down or a pop up, and or it just shoots off in some direction. It doesn't just knot up like this and stay that way. Something's got to give, right? We can see kind of similar to something that happened here, but we're even knotted up tighter, where we started to get these oscillations up and down, and then they got smaller and smaller, and then we just dropped completely down, like unexpectedly one day, just dropped completely down. This was the Corona dump over here, but this was just regular price action. See this, and this was regular price action right here too. Get these type of knotted up areas, and it can just pop down. Right now, what I'm afraid of is that we are in a situation in the world where there's a very high likelihood that we could get a sudden pop down if we don't get some type of expansion into positive price action territory. And I'm a little bit skeptical that that's going to be easy to do, even though crypto is pretty green on the board right now. You can see all of these cryptos have a nice green on the board. There's still some holdouts, but just this index, this batch of coins that I have here, a lot of positive numbers coming out there. Look at all this, BICO, True, I believe that's TrueFi, the audio, Tornado. All of these ones are green, even some of these ones that are a little bit more obscure, like Zilliqa. At least they have green on the board, right? So what's causing that when you look at stocks and you see nothing but red, right? These are the ones you don't want to be green. These are the ones you want to be red. These are the ones you want to be green, and they're all red. So, wow, stocks. Let's just take a look at stocks. Oh, S&P 500, looking pretty ugly, looking pretty ugly. Okay. Finding a little bit of support here, but looking pretty ugly. Dollar. Wow. Okay. The dollar just wow, just shooting up nonstop to the moon. If you have US dollars, uh, that's the safe haven right now, right? That's the safe haven. Everyone's going for dollars. They're fleeing rubles. They're going into dollars. And I was saying the other day, like this wasn't going to stop. This was going to keep going. We're now at, this is a 99% or at 99 level, and wow, this thing is just shooting up there. Yep, the Nasdaq, UK, yeah, this thing puked its guts up, but it's kind of making a little bit of rebound. Maybe crypto is responding to these type of rebounds in the European markets. Let's see, Germany. Yeah, well, wow, yikes. Yeah, poor Germany taking a hit here once again. Once again, like in 2020, it looks very similar to 2020. That, that Corona dump. It's looking very similar. They're almost getting hit as hard, and kind of have to go back to 2015 and 2011 to see a hit like that in the German stock index. But let's see South Korea. Okay, South Korea is finding a little bit of support here. Wow, that's pretty fragile support. But yeah, finding a little bit of support. They have a lot of trade with Russia, so of course, they've been going down. Let's see here. Yep, the Nikkei, the Japanese index here. Yep, just taking a hit. Also, a lot of trade with Russia. Similar situation as Europe. They've got a lot of trade with Russia. So you see our friends all across the world, they're taking hits in the stock market. The US stock markets aren't doing any better, but the dollar just keeps shooting up, which isn't good for Bitcoin. It's not the worst thing for Bitcoin, but it's not good for Bitcoin. And everything's just pointed down. Not really in recovery mode yet. These things just want to come down. Pointing down, pointing down, pointing down. MicroStrategy looks like it still wants to come down. Volatility, holy moly. Yeah, volatility still screaming up there. Just screaming up there. No mercy for volatility. We're in this kind of dangerous zone for stocks. And if stocks are in danger, then, crypto is also in danger. As I've said several times, the stocks provide kind of like a stable platform for crypto to be the risky asset. And when stocks become the risky asset because volatility is too high, then people just get out of crypto because the stock market's already risky enough for them, okay? A couple different measures. Got the Russell 2000 and the NASDAQ volatility. So they're all just screaming up there past these thresholds I've set out for you so that you can understand. We want to be in these nice, safe boxes where the stocks are trading peacefully. This is kind of dangerous territory, and then we're just in chaotic times when we're above this line. Same thing for S&P 500, just slightly different numbers. So stocks are not taking the volatility very well, but Bitcoin is making a bit of a rally. I can see it rallying as we speak, trying to pop up. But yeah, this does still look like it's in its downtrend, right? Everything's underneath these levels. Nothing too special going on here. You can even just make an estimate, run this line through this price action, and you can see very clearly pointed down, right? Just, oscillations. People make a lot of big deals about the line, exactly where you're lining it up on, wicks or the close of the candle or here or there, but you can just get the idea. We haven't broken this downtrend. We haven't changed direction. What we do have is we have a nice, uptrend in price action at the bottom here, but we're still being suppressed by this overall downtrend. And you can even see it here, right? This is still pointed down, still pointed down. So, yep, we're getting into one of these, wound up balls that are going to either spring up or spring down. And the market's still trying to make its decision because, as I showed you, stocks are crazy. So, does the smart money, does the big money, does the institutional money in Bitcoin want to just shoot this thing down with the rest of the stock market, by the way, because the stock market's going that direction? Do they want to just shoot it down and perhaps, just like the stock market, get down to these levels? You saw all those stocks. They were just bleeding straight down. Are we just going to pop down, do the same thing the stock market's doing, and touch these levels? You know, maybe even 15,000, 20,000, 25,000. You know, nobody knows. You know, at least like 30,000, right? Or are we going to make another run? We're going to make another run, another go at it, and see if we can skirt by. Well, I don't know. We have to wait for the oligarchs and the billionaires and the guys who control Bitcoin to really make up their minds. And so far they haven't. I think this is pretty indecisive so far. But we're coming at a heads, right? We're bumping heads here, and somebody's gonna have to give. Somebody's gonna have to give. Are we gonna see something like this where we shoot down and then we pop up? Or perhaps we'll even have a fake out to the upside and then we're gonna shoot down, you know? Very risky territory right now. The world is very unpredictable. Anything could change. One thing that might control this direction is whether or not we can see some of these foreign countries, you know, with their reports in the next couple days, deciding if they're going to do some more money printing. So if some of these, foreign countries, international countries, other than the U.S., because usually we're focused on the U.S. here, but if some of these other countries start saying that they're going to be starting to print money again, just like they did in COVID, then maybe we can see another run. Because the US can't just have a different policy than the rest of the world. That's not how money works, right? I mean, you can try to isolate Russia, but you can't isolate the whole world. So if you have Europe or Asia or some big, collection of countries starting to money print again to save their stocks, which I showed you are bleeding red, right? They're just bleeding red. They're dying, okay? If they say that we're politically at risk because all of our stocks, are getting hit so hard, we got all this pain at the pump, the gas pump, because oil prices are so high, we're just going to inject a little bit more money since we've already got trillions in, and we're going to put another trillion in, another trillion in, and to hell with inflation. We'll just accept inflation for a little bit for a while later. We're going to save the stock market. Then maybe we could see crypto go for another run. But to be honest, I don't think that we're in that position. All of these crashes that you've ever seen on Bitcoin, they've always come when the Fed had, they had arsenal. They didn't just have the gun, but they had the bullets to shoot it also, right? So they had the ability to print money during these type of moments. And so the Fed has always come to the rescue of stocks. But what happened is that even after March 2020, when during this time we definitely should have been printing money. That was a good call. But the thing is, and that was back in the Trump administration, right? So this was well before Biden, right? The thing is that once you get back to a normalized territory, now let's just take a look at the stocks, right? Look at this. This is March, and then what? Right here, April, right? We got back into this normalized territory. At that point, you don't need to keep pumping the machine. Yeah, you could go a couple months. You don't need to keep pumping the machine continuously. But what did they do? They just kept pumping. They just kept pumping, 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 pumping. Just kept pumping as if there was no need to turn off the money machine. No, we had plenty of liquidity, okay? We had plenty of money to go around, but they kept pumping it because they liked these numbers going up, right? The stocks friendly president, right? No, that's the inflation president, friendly president, right? Because pumping up all those stocks artificially, look, I mean, it got super excited, right? They got super excited. This is huge. From here to here, that's huge. And they just didn't keep any of that arsenal in their back pocket for a rainy day. And so, Biden kept the same guys in the office that Trump did, proving once again, you can, these guys can try to divide us any way that they want. They can make it us versus them, as much as they want. But in reality, behind the scenes, they're giving the same favors to their same friends. And it's just a story as old as time, man. These guys are willing to give as much free money as they can to their friends. And when it comes time to correct for inflation to help the little guy, they're too afraid to do it. It doesn't matter if it's Trump or Biden. They're the same person when it comes to this policy. Okay? They're the same person. They make the same policies. And to the Biden administration's credit, they're starting to think about doing it. They've been very public about it. If there wasn't this war in Russia, maybe it would honestly be the right thing to do. It's time to rein in that inflation. It should have been done a year ago. It should have been done, honestly, a year and a half, maybe even sooner than that. It should have been begun. And, you know, no president has been brave enough to do it. These type of policies have been going on since Obama. Yes, Trump was no different than Obama, okay? Trump was no different than Obama in this regard. These policies have just been going on all the way since here, right? Since we had that meltdown in 2008, and they said, okay, well, how can we turn this around? Look, everything's crashing like crazy. How can we turn this around? You know? This was normal. This was normal. This was obviously very exuberant, but this was a dangerous kind of crash, and so they started to pump money into the system, and all that free money funded this very stable, healthy growth in the stock market. Just free cash for all these investors. And now it's time to pay the piper, and we're in a situation like this again where things can come tumbling down. And it doesn't matter if you're a Trump guy or you're an Obama guy or you're a Biden guy or you're whatever, okay? Like these guys didn't treat it any differently. And it shows in the chart. It shows in the chart. We're gonna have to have a correction eventually. And the Biden administration said, okay, we'll do it under our watch. It's time to have a correction. We'll do it under our watch. It has to happen because the longer this goes on, the harder the crash is going to be when it eventually has to happen. And so they said it's time, but this war in Russia has just changed the equation a bit. And so we're going to have to find out. We're going to have to find out on I believe it's the 16th now or something. I believe it's the 16th. What the Fed is going to do for real. Are they going to increase rates 25 basis points? Are they going to increase? Are they going to do a double increase to like 50 basis points and kind of get the pain over with early on? Or are they going to defer it once again, leading to more indecision in the market? And, or even are they going to start injecting more money because our allies in Europe say, hey, you know, we Europeans are struggling the most because of this Russia situation, and maybe some of our allies in Asia are saying, hey, we also have a lot of trade with Russia and we're suffering, so we need to print some money right now. And then is the US going to say, okay, we're your ally, we're going to back you up in that. Inflation's going to hit, the US a little bit harder than we want. And, there's going to be a lot of blame to go around. Every president has done this, right, for the past like 20 years. And, we're just going to accept it for a little bit longer, even though inflation is stacking up in order to support our allies in Europe and Asia. So we're going to have to watch out to see what Asia and Europe does. If they change their policy to printing money, I think the US might say we're not going to increase rates, or they may even say that we're going to have a little bit more quantitative easing also to support it, right? To get that liquidity out, to get those investments going, to help businesses grow during a time of extreme, chaos with the markets due to the Russian sanctions. And, you know, that circles back as inflation later on, which we're already feeling the effects of all of this money being spent for the last 20 years. And, you know, but it could help propel Bitcoin. So let's see. Let's see how they treat it. If our allies say, no, we're not going to increase interest rates, but we're also not going to print money. And so hopefully the market can stabilize itself. Then the US Fed, they may say, okay, we're going to increase interest rates. Going to increase interest rates. I'm not sure they're going to compete with our allies, but if our allies just keep things neutral, then they may increase interest rates, a little bit. And I think we're talking about that 25 basis points. Probably no big shock. But if the Fed does come out super hawkish, it's going to be a shock because I think the market has been changing its mind back and forth about what we think the Fed is going to be doing. And the Russia sanctions have basically made us think that they're probably going to be softer than we thought. At first, we thought that it was going to be harder than we thought, and so the market took a bigger crash. And then we heard, okay, well maybe they're going to be softer than we think. And, it could just be neutral. So we really don't know. They're keeping the situation highly unstable, which isn't good. That's totally on the Fed. Jerome Powell has mismanaged this from the beginning. I don't think that in the history of the Fed that he's going to be reflected upon fondly. He doesn't seem to have a backbone to do what's necessary. He didn't do what's necessary during the Trump administration, and I have no idea why Biden kept him around. Biden should have just pressured him to get the hell out. But maybe it could have been managed if there wasn't this Russia situation. Anyway, we're teetering on the brink, right, of going either big time down or big time up. And you can see this in like the RSI, right? We're in those areas where traditionally we get a big pump. But why did I go over the interest rates the way that I did? Because every time we've had these dumps, it's always been in economic times when the Federal Reserve has come in to save the industry. Now they didn't intend to save crypto, they intended to save the stock market. But the Fed always came in and started pumping free money, right? And so whenever these markets came crashing down, the Fed said, "Oh, sorry you're having any trouble whatsoever, We would hate for our billionaire class to feel slightly uncomfortable. Here's a whole bunch of free money that's going to cost the regular people a lot of money in inflation. But go ahead and have these free loans, Mr. Billionaires." And so they would prop up the market again, and then we would pump. We've never really had a situation where the Fed didn't come in and help because the Fed has always had their arsenal full. They've always had the capacity to lower interest rates. But what happens if you kept interest rates low since the previous tragedy. What if the way you got this pumping is by lowering interest rates to zero? But what if you kept interest rates at zero since then? You can't you can't like go negative. I mean, I guess you technically could. I mean, you could pay people to take loans, right? Like, here, would you like to borrow money? I'll pay you $1,000 to take a loan, right? you could do that. But just imagine what that would do for inflation, right? Like at that point, they're literally robbing the people in order to pay, these big corporations to make operational expansions. And so I don't think the U.S. has the appetite for that. That's a step too far. It's a step too far. But you know, they might not increase interest rates, and so that could just, give us some bounce as the market corrects itself. The thing is that we don't really have the arsenal in at the Fed to pump up the markets, pump up the markets, pump up the markets. So, we got to find out what a real crash looks like and how the market stabilizes itself for real. It's going to be some interesting times. I don't think that the world is going to be able to avoid a recession. And I'm not sure that Bitcoin has been fully tested. I'm not sure the crypto has been fully tested in these type of scenarios of really, of these eras of hyperinflation, of these eras where there's no free money to come in and prop it all back up, in these eras where, it's sink or swim, and only the strong survive. So we're gonna find out. We're gonna find out, and this could all come crashing down, or we could find out that it's as robust as some people had hoped it would be. But uh, hard to say. Hard to say. We're gonna find out. And so we do see a lot of this volatility, coming here, maxing out. Let's try to find a different time frame. Well, this is very middle. Hmm. Yeah, Bitcoin's just trying to decide what it's gonna do, and we're just sharpening into this wedge, getting deeper into this wedge, and we're gonna be spit up or spit down. We're gonna find out. Hopefully, it's something like this, where we just pop up, but doesn't look great. Doesn't look great to me, to be honest. Get our Gaussian channels on. And you can see we're trying to hang on there. I've been explaining this Gaussian channels for the last couple weeks on this show. And you can see we're underneath there. We're not safe. We're underneath it. We had that wick down that I was telling you. I was expecting that wick down. And of course we come back because we always try to swim up. We always try to swim up to the middle to try to, if this is like a tar pit or, the ocean or something, you try to swim up to get a breath of air. And sometimes you can do it if you're just hanging on to the middle, but usually when you get to the bottom, it's just too far to swim and you get stuck there. You can make some noble efforts, but eventually what happens, you're just like struggling too long in the ocean and you drown. Struggling too long in the ocean and you drown. And so on the 5-day, what we're looking for is this to start turning red. It's kind of a danger signal. And we're still green, so we've still got a little bit of hopium that we can swim our way up here, maybe get into those 50s. We're still going to be drowning, and then maybe we come back down and crash. Sort of like what we did here, right? But we started out higher, and so we were able to have this kind of jump. But like this, right? So we got to the bottom, got our head above the water, took a last gasp of air, and then sunk, right? We didn't even get a chance here. So that looks like this is playing out, and the past doesn't dictate the future. So much could go on with the war with Russia. So much could go on with the Federal Reserve. Our allies, the Asians and the Europeans, they could make strategic decisions for their markets that could dramatically affect the outlook of the U.S. market, and that could change everything overnight, which I took a lot of time to explain to you how that might be possible to switch from, an agenda of increasing rates to an agenda of money printing. That's how politics works, right? That's how politics works. You can't just stare at a chart and understand what's going to happen tomorrow. So it's quite understandable that we're in this zone of indecision. We're in this triangle of indecision where we just don't know what's next, right? And anyone trying to tell you what's going to happen next, I mean, they probably have no idea what they're talking about. They don't know what's coming up either. We're just stuck here. And, right now we're kind of on the low end of it. We've had 1, 2, 3, 4, 5 touches. And these triangles, they do tend to break down around that fifth touch or so. And they do tend to break around 70% of the distance. So that's approximately where we are. Maybe we have, another pop up and then a breakdown, or maybe we pop up and then retest the top and break up. But we're getting into that zone where these triangles usually tend to break down. They don't usually get wedged all the way to the corner. They usually break down somewhere in this area, either break up or break down. And if we look at the 5-day on this RSI, you can see we're kind of flat, right? Just flat. We are in the bearish control zone underneath this red area, so not too enthusiastic. On the 3-day, yeah, we're in that bearish control zone. We are getting above this EMA, which is good. It's kind of like we broke out of this downtrend. But we're just flat and we're in the bearish control zone. And even though, like, this was a summer, right, when everything exploded up in crypto, even though we reached this point, like right here, we reached that point, we didn't explode up, right? This is summer. This is when we had another bull run. Like we've reached that point, but we're not having a bull run right now. There's nothing exuberant in the market right now, right? We reached that point back here in January in 2020, right? Show you what that looked like. Right, back here, right? We had this whole bull run. Whoops, where am I? Yeah, January 2020. Right, we had this kind of bull run right here. I mean, of course, COVID took it down, but it continued all the way up with that free money, of course. But the point is, you had kind of a bull run. And again, right here, similar one right here. When we broke out here, nice run. Broke out right here, very nice run. Broke out right here, very nice run. Broke out right here after COVID, very nice run. All of these breakout points on the 3-day, they've had very nice runs follow them, except for this one. This one's doing nothing. We, in fact, we got under it, and then we got above it, and now we're getting under it again. And we're just barely above it. So is this going to be the chance to get above it and have a little bit of a run? Might be less enthusiastic than you think. Something's going on in the market. We're not popping up. We're waiting for something. I think, what's the date today? The 7th? Maybe we're just waiting for the Fed, the news from the Fed, right? There's so much indecision. What is it? FUD, right? Fear, uncertainty, and doubt. The Fed represents uncertainty. We don't know what the Fed is going to do, right? The war with Russia represents fear, right? And then there might be doubt because, we are so high above our, weekly EMAs. And people just might believe that we need to have a correction the same way that the stock market is having a correction, right? You look at stocks, they're coming back down. Look, breaking the 89, coming back down to the 200. What happens? They touch the 200 too, right? It's not just crypto. It happens with stocks also. Break well down below that 89, get in touch with that 200. And again, this is the disaster in 2008, which caused all the money printing policy to go on for the next, what is it, like almost 15 years, right? So after this chaos and this chaos here in 2001, right? This was after 9/11. This is after the terror attack on the Twin Towers. Well, maybe it just added to it. I'm not sure. I'll have to get the dates exactly right. But anyway, presidents and politics said, hey, this is too much chaos in the market. This is very damaging. And so they decided to go for a growth model of business so that business is America's business, and we're going to pay for it in the form of inflation. And that was just the policy from then on, all the way since the Bush administration. Right? So Bush, Obama, Trump, Biden, they're all in on it. They've all taken part of it. Biden is considering to turn it around a bit, but he's just not able to do it. Not able to do it. He did spend a lot himself, of course, and so it does make sense that he takes the burden of it to make those decisions. If he's going to spend like these other guys spent, it makes sense that he makes the decision that we're going to have to, lower interest rates and, get back to normal. But is it the right time right now? We don't know. Anyway, I'm just pointing out that crypto has the same issue. We're dipping below the 89 now. Well, we're not. Are we even dipping below it? No, we're riding on top of the 89. We stuck our toe down for a second. But if we follow stocks, we're going to start breaking under this 89 on the weekly. And then if that crosses bearishly, then we're going to get squeezed down. And it's just going to be inevitable. This plays out. Right? It's going to be inevitable. And so that's the doubt. There's a lot of doubt that we can stay above this long. All right? Usually you have a blow off top and then a relief rally or something. Blow off top, relief rally. This was obviously a rounded top. But you don't usually have, blow off top, blow off top, blow off top, blow off top in a row. It's unsustainable. You can't just continue up forever. You have to check back eventually, build some ground. Then once you have a solid ground, you can build up again. And so there's the fear with Russia, there's the uncertainty with the Fed and the Federal Reserves around the world, what the next policy is going to be for the next, couple years, maybe the next year, and then doubt that we can even sustain this because a lot of people have already cashed out and now they want to get back in at these levels, right? They don't actually want crypto to do well right here. Crypto's in the middle. They wanted to either go to 100,000 or they want it to crash to 20,000. They don't want it to be just in the middle and rise up because they're not buying in the middle. Who's buying in the middle? You're buying here. You're buying here. These guys cashing out at the top here, they bought here. They bought here, right? They bought in the previous cycle and they're cashing out here. The smart money, right? They've made a lot of money. They want to buy back in here. They don't want to buy back in basically where they sold. That makes no sense. That makes no sense. They want to buy back at good levels, which historically is this 200 EMA on the weekly, right? So they want to buy in this level. And if they can push this market down, they're going to do it. Of course, if the Fed steps in and gives you free money, then, they're going to go for the magical, internet money ride again. But right now, there's that fear, uncertainty, and doubt, and we're just being wedged to the side, and you're seeing a lot of indecision in the market. But to its credit, we are getting above the 89 again. We keep threatening to break down, but we are getting above it again. And you can see what happens when we get underneath these 89s. Look what happened here. Ooh, this is kind of a scary thing, right? We had this wedge, kind of like what we're doing right now. We had this wedge right here where we got forced in, and this one actually did go to the corner of the wedge, so maybe it's possible, right? And it did walk along the bottom. So this one had approximately, let's see, 1, 2, 3, 4, 5, 6, 7, and then kind of a little arc before a huge drop, 7 touches, and then just the ride of your life, right? If you were in the market, you got destroyed, right? And this wasn't COVID. This was not COVID. This was just the regular market. Okay, this was COVID. This one was even more shocking. When we got below these purple 89. And what's happening right now? I mean, on the weekly, you can kind of see it. Like we're getting wedged. If you just ignore these wicks, if you ignore the wicks, we're getting wedged. Like there, right? 1, 2, 3, 4, 5, 6, 7 would bring us to this point, and you can see these are the 89s crossing over. They're bullishly crossed right now, and they're about to bearishly cross. Yep, like this. You see the darker ones on top, the lighter ones below. And so they bearishly crossed, and this thing just went to hell. When they were bullishly crossed with the lighter one on top, they skyrocketed to heaven. And you couldn't see that here because this was just, you look at the other EMAs for this this really tight time frame. But the point is, we're having a similar type of scenario where we have this wedge, we have price action being forced into this really high intensity corner. And if we get below these 89s, that's not going to look good. But perhaps there could be the case that we pop up if we don't get below it. And maybe there's some positive news from the Fed, or maybe the the Soviet war on Ukraine is canceled or something. So let's find out. Not really much more to say. I've already covered it all in the previous videos, just what's generally going on. So, we can take a look at all this stuff. Total market cap creeping down, right? We got huge wicks on these on the weekly. But in general, you can see it kind of just pointing down, getting underneath these EMAs, pointing down. Is this a good correction level? I don't know. I don't know. The big bounces came at the 200. We've had bounces in this area before where we just got a nice bounce, but then we kept coming down. So perhaps we could have a nice bounce and then we keep coming down or keep rising. But I'm not banking on this stuff right now, just watching. We did hit my buy zone from the other day. So for short-term trades. But the price action has been narrowing so tightly as we consolidate into this kind of wedge that it's not really worth the risk of that downside drop. Because if you have that downside drop, you don't want to be holding that while we have the downside drop. I'd rather wait for a confirmation of bullishness. And while we have higher lows, we're having, either double top or triple top. This is actually a triple top. Or on other time levels, it's actually a lower high. In case of grayscale, we saw something interesting where it broke down from our levels. So I moved this one. But let's see, where did I have that? Oh yeah, right here, right? Something like that. What the heck? Yeah, something like that. Get rid of this. So we expected this price action to kind of follow along this fractal, and it more or less did. But what happened is we broke down from this midline. This was a very important midline. You could see here, here, here. When it broke down over here, it was in dangerous territory, of falling down. This was actually expected. This was where it was expected to break down by our fractal. It did it. It basically reached the same levels and then popped back up, just like almost on cue. Reached the exact height that you would expect it to reach, right at these important levels also. See here, 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 almost to the perfect accuracy. And then pop down to this level. Okay, fine. Then this nuclear war information, the nuclear power plant of Ukraine being attacked, it just broke the model. The smart money just decided, you know what, we'd rather get out of our positions of Bitcoin because we're not sure what's going to happen in the next 6 months. So we're not going to have our Bitcoin in a trust for 6 months because we want our money right now. We want to get it out of the market. And so they broke their own fractal. Something in this of the psychology changed. They have insider information. Something happened. And then they totally broke down from their model. This represents a new type of thinking. This is not able to be seen in the Bitcoin chart. It's only able to be seen with this grayscale model. And so we can decide, whether or not they want to come back up to these levels and get back into this channel and try to recover some of this price action. Because what could happen is that we could just interpret this drop as just this rapidly accelerated, and maybe we just move it like this. And what could happen is that we just lost all of this opportunity. Okay, so just ignore the first half of this fractal. And maybe if something goes better than expected with the war or with the Federal Reserve, then maybe this price action plays out and we pop back into our channel and we have a chance for another run. So now this is kind of what I'm looking forward to. I think we lost this chance. I think this is the chance that we have remaining, where we have this breakdown, and this is kind of how their psychology. It's weird how their price action follows this psychology too. That's that's so trippy that it's almost identical right there. It's almost identical how it breaks down. Look at this top. It's very similar to this top, how it breaks down, and then how it marches down this diagonal. It's just this shouldn't be matching that perfectly. I mean, obviously it broke down a little bit more here, but we don't have to be that much of a stickler for details. Look at the height of this wick and like the height of this wick that was on this fractal. Just so funny. And the angle of the decline is almost exact. That's intense. That is crazy. And so and even this little recovery area right here. See, we're kind of attempting a little bit of a recovery here. If you look at this, it almost matches this little recovery right here before the pop-up. So, yeah, I mean, if this fractal really does represent the psychology of the smart money, then just like it kind of chopped and broke down and kind of wicked up to these areas, then maybe if we enter this little recovery mode and we start to see this type of a candle back into this channel, maybe we can think that a run has the possibility to go again. So I am looking at the smart money still. I just want to cover that because I don't want you to assume that I just forgot about it. I am trying to be accountable to these ideas that I put out there. If something gets invalidated, I'll be honest about it and say it got invalidated, right? But an invalidation can also give you a clue as to what might be happening next, because you can see little hints. You can see little hints. And, these fractals don't have to play out perfectly. They can drop a little bit early. They can dip while this one's pumping, but as long as they generally stay on course, they're following the psychology. A fractal is just psychology. It's not, you don't expect the price action to be perfect. You expect the psychology to be respected. So the psychology is saying this type of choppy dip to approximately this relative level, and then a pump to approximately this level, and then a pullback. And now we see something got broken in the psychology. And then we can fast forward to see where does it reset, because when this thing had a breakdown, when the smart money has a breakdown, what do they do to reset? They kind of like get into this type of mentality. And we saw it down here also, right? Very similar. Very similar. Top, very similar. This choppiness, look at this. It's almost identical right here. And this even follows. It's just that this part right here didn't dip as low. So this psychology of the smart money is built into this fractal. And if we see a failure where we continue to go down, then we might expect to see that they're going to retest their trend a little bit with this blue line perhaps. Maybe come up here, retest it, and then it breaks down. But if we see a recovery, then perhaps it's going to look a little bit more like what I already showed you. Something like this, where it has this little pop-up, and then we get back into the channel. All right. And then we have another chance to try, perhaps, if we don't get smashed down by the Fed or by the Russians or something. Let's see, before I go, is there anything that we want to take a look at here? Yep, this was the buy zone. This was the DCA zone that I set, and we did get underneath the this quadrant of it. I was hoping for along the lines of 35,500. I was targeting approximately 37,500, and we did get that. We got better even, 37. Because if we have a pump back up to this level, or we recover this upward channel, which we dropped out of, right? We had an upward channel, or the makings of one. Higher high, higher high, higher high, higher high, higher low, higher low, higher low. But we broke down, right? The nuclear possibility of nuclear war, the nuclear power plant being attacked for the first time. I don't know if that's ever happened. I don't know if anyone has ever attacked a nuclear power plant that could contaminate all of Europe. That's crazy, right? That's just crazy. So of course it broke down. But can we recover this line? Somewhere around $41,000, $42,000. Get back into this uptrend, and then take some profits, you know? Or are we going to have the breakdown? Is this just going to be a head and shoulders now? And are we eventually just going to make our way down to this $30,000 area? And is it just inevitable now as this triangle eventually makes its way into this corner and then pops, and then maybe that's just the final straw and we start to break down? If we can recover this area, 41, 42. By the way, because of this diagonal on the top of these, this kind of like downward, see the tops kind of have a downward angle to it. This is just my take profit area from any DCA right here. Just take some profit. And if you get on top of that around, 52-ish, to this 50, 45-ish area, and we can sit on top of there and kind of start bouncing, then, maybe DCA in again. But this is kind of a low risk area, at least for this type of a play. But, obviously for the reasons I've outlined, and also historical reasons where you see how we kind of chop down to a baseline. If we start playing out that type of pattern where this triangle is really valid, and you see we get above it, we get below it and above it, so this isn't perfect. This one was really perfect. Then it's not the best play, because if this is imperfect, then this is just a guess, and we're just going sideways, and we don't know, what's the best level, to be honest. But it worked out here, where if you bought at the bottom of this triangle, you had a nice run, and I would expect kind of a run to around 50K if we did pop up. And if we break down, I expect, that you have a stop loss somewhere, for me, somewhere around this low, around 33. I don't want to see us going under there. I think Bitcoin's breaking down if we do that. That's just me personally, just from my perspective. But I think DCAing in as low as, 35,000 is pretty reasonable, because I would still think above this low right here, above 35,000, we still have a chance to pop up, even get to those 50,000 levels. And that's just based on my analysis, just for a possible run. But below that 33, I think we've died on the Gaussian channels. And this, again, it's just my theory. I'm not copying anyone's idea. I'm just, I could be wrong. But I think under 33, what's going to happen is that we're going to get beyond these wicking points. We're going to get beyond what we can reasonably wick to, and we're literally going to be breaking down to, and this Gaussian channel I think is going to turn red, and we're going to have that capitulation to fall to hell. And who knows where we land? Because we've always had the Federal Reserve, and again, that ties this whole episode together. We've always had the Federal Reserve there to pick up the pieces and lower interest rates and get the market back up. But what happens when the Federal Reserve has no more ammo? They have no more ammo. They've used it all up. They've wasted it. They've wasted it. They've spent 15 years wasting it and they have no more ammo. We're entering a period of hyperinflation. They can't keep using that ammo. The people are going to revolt, right? Things are going up by 15% in price. People are going to revolt. And so the Fed has to make a very difficult decision. Keep the stock market afloat, keep crypto afloat, keep all these risky assets afloat, or help stabilize prices for regular people. And, for most traders, you're both regular people and you're in this market, right? So, you know, you may be on both sides of the issue, and that's understandable. But we know that the big, billionaire investor class, which side they're on, and we know, what a lot of our family's side is on because they're struggling to make ends meet. But just from a practical point of view of this setup, and I just try to tie everything together, but just from a practical view of this setup, I can see us wicking down in this box area and just DCAing in on that box area. But if we break these wick lows, you may want to DCA out because we may fall down further than you think. Otherwise, you're just buying at support at good prices for a potential run. And so that's just a DCA. It doesn't mean deploy all your cash, just DCAing in case we pop up, which again, historically, we pop up at these points, right? We're under this white line for so long, just falling, 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 start to curl back up, we break above, and when we break above and hold it, then we have a nice run. Well, we broke above, but we just haven't been able to hold it yet. And so that makes us more similar to, let's find one. It makes us more similar to here, right? Where we broke above, but we weren't able to hold it. We broke above, weren't able to hold it. Broke above, weren't able to hold it. And how many times can you not, let's say you're falling and you have to grab a rope to save yourself. How many times can you grab the rope before you finally hit the bottom, right? Well, we've already had a couple tries and we haven't been able to grab that rope yet. So like this one, are we gonna smash into the bottom? Or like this one, are we gonna grab the rope and push up and have a nice run? This is looking ugly to me. Okay, it's looking ugly. So no guarantees. But if we do miss the rope and we come smashing to the bottom, you're going to want to have some money to deploy to buy at the bottom to get the best prices. Because historically, these are the best places to buy, at the bottom of the market. Not at the top when everyone's happy, when everyone's telling you to buy, when Crypto Banter and, Cryptos R Us, George and all these guys are telling you to buy like every, poo coin that's out there. All these altcoins. Oh, we love Phantom. We love Phantom so much. We love blah, blah, blah. Solana's gonna go to the moon. They're already telling you, while things are already overheated. You want to buy when everyone's depressed and they think that crypto is going to go away, and when all these coins are dying off, then you want to buy. Gonna wrap it up there. That was your alpha for the day. Stay safe, guys. Happy trading.